Today, Thai regulators file a police complaint against ZipMex. El Salvador marks 1 year of accepting Bitcoin as legal tender, and cryptocurrencies are plummeting today. We talked to Arca's Jeff Dorman about what's behind the sell-off. Welcome to CNBC's Crypto World. I'm Jordan Smith. Digital assets taking a dive this morning. By noon Eastern, Bitcoin fell to the $18,000 level, Ether plummeted to $1,500, and Cardano slid to 47 cents. All right, let's talk about the top stories. First, it's officially been a year since El Salvador made Bitcoin legal tender. In September 2021, President Nayib Bukele signed the Bitcoin law in the hopes the cryptocurrency would boost the country's economy and drive cross-border payments. And not long after the law went into effect, Bitcoin hit record highs. Of course, things look wildly different a year later. Bitcoin is stuck below 20K, and a study from the National Bureau of Economic Research in April found only 20% of El Salvadorans continued to use the country's wallet after first downloading it. Next, the European Central Bank just gave an update on its plans for a digital euro. EU officials said the digital currency will only allow payments between individuals rather than businesses. Companies won't be allowed to pay employees, nor can the currency be used in DeFi. The manager of the digital euro program said it's not clear whether blockchain technology will be used either. Still, the ECB plans to build out the digital currency in phases in the hopes of eventually allowing payments through Web3 services and more. Finally, Thailand's Securities and Exchange Commission just filed a complaint against ZipMex. The regulator filed the complaint with police in the hopes of collecting information on transactions. ZipMex said it's currently in the process of compiling relevant documents as it goes through bankruptcy. ZipMex is among several crypto businesses that collapsed as a result of the crypto sell-off through the spring and summer. All right, for our main story of the day, let's talk about the sell-off happening in cryptocurrencies today. Crypto World's Tanea McKeel spoke to Jeff Dorman of Arca about today's losses and his outlook for the crypto market.
Let's go over the markets a little bit. We saw over on the equity side, stocks are still sliding after that Jackson Hole speech. How are you contextualizing the past couple of weeks, and what should we expect going forward from Bitcoin?
Yeah, I think it's important to recognize that I don't associate Bitcoin equaling crypto. I think this asset class has grown and diverged quite a bit with a lot of different types of assets now, right? From asset-backed tokens to layer one protocols to Web3, DeFi. Some tokens accrue economic value, others don't. As a result, I actually think that most of digital assets have actually started to decouple from macro, and you've seen it over the last few months. Things like the Ethereum merge have taken over as a narrative. You've also had a lot of governance plays and restructuring in the market to add value to tokens. Bitcoin, on the other hand, has not decoupled. In fact, I think Bitcoin has gone the other way. Bitcoin has become more of a macro asset. And a lot of that is because Bitcoin has lost its narrative, right? It hasn't proven to be defensive. Ethereum is actually down less than Bitcoin, for example, this year. But also Bitcoin underperformed on the upside in both 2020 and 2021. So it has poor up capture and poor down capture. It's not proving to be an inflation hedge. It certainly isn't being used as a medium of exchange. I think dollar stablecoins have taken over for that. So you put it all together, and it doesn't mean Bitcoin's future is doomed, but at least in terms of short term, Bitcoin has really just become a 24/7 VIX, or really just an extension of the NASDAQ, right? It's really trading lockstep with equities and with the macro environment, whereas other digital assets are really starting to move more idiosyncratically.
And so what's going on with Ethereum? Because in the past few weeks, it's actually outperformed. Some would even say it's led the crypto markets as of late. So where are you with Ether right now? How do you see the latest moves?
It's really not just been in the last few months. You can go back to the Bitcoin halving in mid 2020, and Ethereum is up almost 4x versus Bitcoin over that time period. Most investors don't have any sort of ideological view of crypto. They don't have a philosophical viewpoint. They really just want to make money if blockchain works, right? And if you look at Bitcoin, Bitcoin is just a global currency, right? It is. There's nothing to it. There's nothing built on it. It is just either a store of value or some sort of macroeconomic asset. But Ethereum is now probably the best single representation of being long blockchain, right? Something where you can just say, I want exposure to what blockchain technology is offering. What's the most simple way to get that? And Ethereum is the market leader in layer one protocols in terms of market cap. It has the highest TVL, total value locked, in terms of DeFi. It has the most activity in terms of NFTs and gaming. It has the most activity with dollar stablecoins. You look at each of the success areas of blockchain technology to date, and Ethereum is the market leader in all of them. So I think when you combine that with the upcoming merge and the fact that, Ethereum is going to be certainly disinflationary, if not completely deflationary, you now have an asset that gives you all of this exposure to the different areas of growth in blockchain technology, combined with the fact that the ETH token is now going to accrue economic value directly from that growth. And it's a pretty powerful asset to own. And I think it's why most investors are now flocking to it.
Where is the interest in blockchain technology and the potential projects that can be built on top of it? Is that still pretty niche within the crypto space, within the tech and tech investing space, or do you see that a little bit more widespread now since the mainstream retail market got a glimpse into the potential of things like NFTs? So where is sort of the narrative on blockchain technology, and who are the people that you think are long blockchain, as you put it right now?
Sure. Yeah, it has definitely changed a lot. I mean, we launched Arca almost 5 years ago. And in the first few years, every investor who came into us, regardless of what product we were offering, basically said, can I get Bitcoin-like exposure, right? To them, Bitcoin equaled crypto, equaled the entire market. Over time, though, that has started to change. And investors are starting to get deeper with their understanding of what the different pockets of blockchain technology are. I almost, a lot of times I like to draw the analogy of the ETF market, right? The first ETF was spiders, right? The S&P 500. Clearly, that was not the end of what ETFs offered, right? ETFs now package everything. The ETF technology itself is sort of secondary at this point. It's what's inside of it that matters. And I think that's where we are with blockchain technology as well, right? At first, everyone assumed blockchain technology equals Bitcoin equals currency. And now we're starting to realize that the blockchain technology itself, or rather the digital asset that you can own, is really just a package. And what you put inside that package can have equity-like properties, it can have commodity-like properties, it can have debt-like properties. And there's all these different ways now to get different pockets of exposure to the growth of digital assets. You mentioned NFTs, there's gaming, there's Web3, there's DeFi, there's all these different things that you may or may not have interest in. And now there's different ways to get exposure to just all of it, like I said, Ethereum, or pockets of just little niche exposures that you're interested in. So I think there's two forms of investors now, right? There's the passive investor who just wants the exposure, and they're largely looking at it either sector by sector or just in this holistic way. But then you have the users, right? The people who are actually actively engaging, the ones who are actually actively using DeFi to take out loans or to trade, or the ones who are actively, getting involved in the NFT market, or maybe playing some games that involve NFTs. So you're starting to grow the collective use cases of all of these different types of users and different types of assets. And as a result, the macro investors are still largely focused on Bitcoin, but the more equity-like investors are focused on Ethereum and the applications built on it. And then, of course, you have this this user base that really just wants to use these assets and interact with them and grow their assets through participation rather than through just passive investing.
We have the Ethereum merge coming up next week, and let's start with price. What do you make of the price of Ether running into the event, and what are you expecting to see in price when that transition is complete?
The event itself is a lot like the Bitcoin halving event itself, whereas like the day is going to come and go, and there's not going to be much fanfare behind it. It's not going to have an immediate reaction to price, other than maybe a buy the rumor, sell the news type reaction temporarily. When you move from proof of work to proof of stake, which is what the beginning of the Ethereum 2.0 roadmap is, you're going from mining rewards, which are currently 13,000 ETH per day, which is basically $21 million of ETH per day being given out to miners. That's going to be reduced by 88%. And all of a sudden, you're going down to staking rewards of only 1,600 ETH per day, which is like $2.5 million per day at current levels. So you're basically saying, okay, 1,600 ETH per day are going to be issued to stakers, and 2,000, even at the low levels, are being burned every day. That makes ETH net deflationary, right? That means that if you assume demand for Ethereum is constant, but the supply is decreasing, you should have a price increase. And I think this is really where the biggest investment opportunity is that there are a lot of projects and applications in the digital asset market that do, in fact, accrue revenue. Well, in this case, if you are an ETH owner, you are going to directly benefit from those fees and that activity that are going through the Ethereum network, and that makes it a pretty attractive investment. And there's not a lot of them, right? I mean, you have things like BNB and FTT, which are exchange tokens. You have some of the DeFi tokens, right? You have some tokens where these revenues and fees do actually accrue to the token, and ETH is becoming one of those. So I think long term, you're going to look back 6 to 12 months from now and be like, well, that was obvious. ETH is way higher today than it was a year ago because of the merge, but it may not actually happen in and around the day of the merge.
All right, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.